Hi everyone, welcome to episode 4 of Learn2Trade. Today is order blocks. So I'm going to go through what is a high probability order block, just a medium order block, a low probability order block, and how you can use them. So we'll mark out probably a high probability order block first. So let's make it bearish. So I can't move that, that's really annoying. Okay, so let's say we have two candles, right? Actually, no, we'll make it bullish. Let's just pretend they are the same width, right? Let's draw a small wick out here, and that's it. This is actually we can have a bullish, have that done there because that's more likely, right? And pretend this is green. Actually, I can make it green. There we go. And we'll make this red. Right. Okay. So this is our order block structure. So imagine we've had, where's my brush? So imagine we've had lots of downtrend movement, you know, bouncing up, down, up, down, up, down, and continue going down. And an order block is going to show a sign of a reversal. So imagine we've come down, let's say we've taken out this strong, so I don't know, it's a yesterday's low. This is yesterday's low right here. Previous day low, or PDL, which is a high probability liquidity point to be taken and then reversed upon if the structure is correct. So let's say we've taken out this previous day low, and let's say this is an hourly chart. When we see this, this candle form with little to no wick at the top, it's bearish candle. If we were then to have an engulfing green candle like this, where our close is above the previous candle's close, including, let's say we had a wick here, this would not be an order block. However, this would be an order block, but the smaller the wick at the top, the stronger it is. So our order block would then be this box here. So it would be the top, let's change that to blue so it's easy to see. So this would be our order block. It'd be from the open of this red candle to the wick at the bottom. And so what does an order block do? So first of all, it will show that there's, you know, the reversal is likely. So obviously we've taken this previous day low, but we can't just, the instant we hit this previous day low, go, right, okay, I've seen one green candle, I'm going to buy and it's going to smash up. It's not how it works. We have to have confluence. Confluence is, it's like, imagine you have an idea and it just gives support to this idea. It gives you more reason to buy. So what does order block, and also order blocks can be entry models. I use order blocks for entry models for Forex, but other people can just use them as confluence or however they want to use it. So there'll be two types of entry you will get with an order block. Well, three really. So number one, imagine I'm price. So we're going to open here because that's where we've closed last. I'm going to bounce all the way up, make an external high. We're then going to come down. And now what we're going to do, let's say up here, and this is our high. How would you trade this? Well, first of all, we've tapped into this order block. If we want this order block to be strong, we'd like only the wick to come in. So an ideal candle would be this, right? Let's say this is bullish as well. That'd be perfect. So prices come in, tapped in, so it's opened here. It's come down, wicked into this order block, come up and closed above. That would be perfect. However, if this was bearish, for instance, where we've opened here, we've come down, then we've closed above, that would also be strong. So ideally, we'd only want to wick into this order block. And where would we target if we're using order blocks as our entry model? So we'd come up, come down here. Target one would be this high. This high. This would be TP1 no matter what. We take the internal high. Because if we take the internal high, we do have reason to come down. You know, there could be a fair value gap here that we deliver from. There could be a high here rather than this external high that we want. So that would be what our model would be, we'd want to have take profit 1 here, take profit 2 here. So what else can happen? Something happens commonly with smaller order blocks. When I say smaller as in lower time frame, so 5 minute, 15 minute, however. So let's say this candle closes here. We would then have, let's say we've got a second bullish candle that pushes up and wicks in here. However, what this would have done is, imagine we're on a 1 minute time frame. Let's draw the brush. Imagine on a 1 minute time frame. So we've just come up here, we'd go down, and then instantly push up. That's what would happen. It would happen instantly. It wouldn't be a big move up and then you retrace into it. Sometimes it can just come straight back down and then push up. So that's why the instant this candle forms, you've got to place your limit order really quickly. So that's the second way of doing it. And the third way is using the mean threshold. So this candle is particularly strong because it has no wicks at the top. So it's a very high probability order block. And however, let's say it wasn't a high probability order block, or let's say this is on an hourly chart, and inside of here, there's a 5 minute order block, it's a 15 minute order block. What I would do with that is, obviously I'd look through all the time frames and find the order block that I want to use. And let's say there's a 5 minute order block that's here, or in here somewhere. At that point, it may be that the mean threshold, which is this middle line here, so the mean threshold is a fancy word of saying the middle, the mean threshold might be respected. So in that point, we can still be bullish and the order blocks can still be valid. If we have, let's say this is bearish. So we've come up here and we've pushed down into the order block and we've wicked past the 50% mean. If we were to close behind this mean threshold, I would then be praying on my knees that the trade works, because if it does work, it won't work because of my idea. It will work for another reason, which happens, but it's more just luck. Like, you want your idea to be the correct one on why the trade wins, because then you can learn from your losses, as opposed to if you're winning every now and again and losing every now and again, but you don't really know why you're winning or losing, then how do you learn? How do you become better? That's why I don't trade indicators. This is why I don't trade moving averages or crap like that, because it will lose all the time and it'll win all the time. When you lose, you've got no idea why you lose. You've just lost. You've done everything right, but you've lost. Whereas with this, if I lose, it's a skill issue. It's my fault, which is why you want to learn properly why price moves, not just what sort of crap trendy strategy can I do. So that's high probability order blocks. When is an order block invalid? So let's remove these drawings. So let's say, let's make price actually more descriptive. So what price has done is it's come down here, it's come up, it's come down, and reached this point there, right? Obviously not as smooth as this is, whatever. What is this? This point here. This is the internal high. So obviously we were talking about how price can wick in instantly. Let's say it doesn't do that. Let's draw our candles. We come up here. That's bullish. We then form a doji. So let's draw ourselves some wicks as well. Let's see that came into there. Let's see this wicked above the external high. This wicked above the external high and wicked down a little bit as well. And now let's draw one more candle. So this is now going to be heading down. So where are we? It's now a bearish candle. Small wick, no wick at the bottom, but it doesn't really matter. Let's see. There's a small wick at the bottom. Would I place my limit order here, targeting this high and then this high? I've put it in the wrong place. There we go. Would I place that limit order there? No, definitely not. Why? Because number one, this is drawn straight down. We don't know what it is. This is just a random line. However, could easily be fair value gaps here that price is delivering from, which would be fine if we didn't take this external high. But because we've taken the external high, we've taken this buy side liquidity here. So we've already taken buy side, and there's a chance we could be delivering from a fair value gap. This is now a high probability reversal in the direction against us. So why would we take a trade after we've seen the reversal and now we've seen a reversal against our direction that we want. So why would I take a trade here? Like, obviously, it could come down, tap the order block and win, right? But we want high probability moves. We don't want maybes. You want trades that you go in and, you know, to win 60, 70, 80% win rates. You want to be profitable. And that is not how you do it. You would never, ever, ever take this trade. Well, if price takes the eternal high, just wait, be patient, wait for the new setup. It's fine. Because if you're just taking every single crappy little order block, you're going to be taking trades all day and you're going to best break even, if not lose money, over a long period of time. So now that is a high probability order block. I'm just going to go to all. Actually, I can just delete it all. Right. Okay. So this, as we said, this was our high probability order blocks. This is our bullish high probability order block. I'm not going to draw wicks there because I can't board. That's our bullish high probability order block. No wick, closed above the open. How would this be slightly less probability? Let's say we have, we'll do it bearish this time. So we've got this. This is our bullish candle. See here, just a very, very standard candle. Sorry, what am I doing? There we go. And then we'll draw the wick. So this is a medium probability order block, or is it? Is this an order block? So we have the bullish candle and then the bearish candle. This bearish close is below the bullish open. So this is an order block? No, it's not. Because this bearish close has to be below the wick, no matter what. Like whether there's no wick or like, yeah, there could be a tiny, tiny wick here, or there might not be nothing. But it has to be below or above that wick. It has to close away from it because that shows the momentum of the reversal. If I just see a candle here, this can easily just be a retracement into some, I don't know, there could be a candle here. You know, this could just be a fair value gap. And we tap into it, take this small amount of sell side, and then push up again. Like we have no strong reasoning to say this is a reversal happening now. This is not an order block. So let's turn it into an order block. This is now an order block. As you can see, we've closed below it. For this order block, I'd probably use the whole candle as it's just less. It's less likely. This order block isn't good because we don't want to see that wick. That wick is just not good for us. Let me move that to the front. It's not worked. Anyway, it's just not order block you want to see. So you do sometimes see order blocks like this that do work. So let me find. There'll be a high time frame one here somewhere. So like this, right? This is an almost identical order block from what we've just seen. Where we have a smaller body and we've got two wicks either side. And as you can see, this has already been disrespected. Let's find another version. We've got one here. It's just not very good. Here we go. Another one. You'd look here. You can see that we've closed above, but just we respected here. Then we push up a little bit, but it's just not a strong order block. Whereas let's try and find a high. Here we go. Look how easy it is. How prevalent these are. Order block right there. So that we've tapped in, we've pushed down, we've taken some sell side here. Obviously, it doesn't look like we've taken much sell side. But if we go down here, look, we've taken this sell side, we've taken this. You know, you can get a really good trade out of this. If I'd literally just had a limit order on the daily chart, you could have made, taking that sell side, 1.6%. Easy. Just using liquidity, order blocks, easy as you like. I'm trying to think if there's anything else we need to go through in terms of order blocks. Yeah, the importance is large body to wick ratio. If the wicks are large and the body is weak, and this is mainly on the first candle. This is the candle that can then be order block, to become the order block. You want that to be predominantly body. You want it to be like a candle like this white candle here, or this blue candle might be quite good, but it's not an order block. Stuff like that. You'd want large candles with not many wicks, because wicks just shows indecision. Because it's taken this high or this low, but it's closed back into the range. You don't want that if you want a reversal. You want strong, clear movement. And one more way I would not take an order block, and something you should avoid, is this particularly happens on high time frames. So I'm going to draw out, I think I took a trade very similar to this that I shouldn't have taken pretty recently. So let me draw out my structure. So let's say we've got that there. Give me 1 second. So, as you can see, we're bearish. Let's say there's some liquidity here that we've just taken, right? Or more likely, let's remove all this. More likely, let's say we've wicks down here, but we don't care about when it's bearish. When it's a bearish order block, we don't care about the wick down. That's fine. It can do what it wants. So let's say if there's a high time frame PD array there. Let's call it previous week low. Ooh. Previous week low. So reflect the previous week low. And then what have we done? We've created a bullish, if I can actually draw it, created a bullish order block, which is true. However, we then look at the wicks. So the wicks come down there, that's fine, don't mind about wicks down. However, the wick is up here. Why would I not take this trade? Even though we've created an order block, and it's not to do with the wick. The wick to body size is already, like, the wick to body size doesn't matter as much in the second candle as opposed to the order block candle, which is really important. But what I really don't like about this is, what is this? This is a fair value gap. And price delivers from fair value gaps. What have we done? Let's say this is a high time frame, right? This is a 1 hour time frame. We've just taken the previous hour's high and delivered from a fair value gap. That is cause for a reversal. I can definitely see price tapping into this fair value gap and going down, especially if it was like this, where it's wicked through the entirety of the fair value gap and then closed slightly in it or below. Like, it's very bearish. And even if there wasn't like a large fair value gap there, if you see, assume that fair value gap doesn't exist. If you see a large wick up like this, where we've showed our buy momentum, but we've only just closed down here, like we showed all our buying momentum, or let's say the other way around, it's selling momentum, but then it's closed pretty kind of indecisively, then you just stay away and wait for the new setup. You don't want indecision in price. You want clear action. And that'll be a trend for whatever you trade, however you trade. You want momentum. You don't want indecision and kind of swings and kind of just rubbish. Let me find some example of the Nasdaq being rubbish. Like, I don't know, this. This is all kind of just a bit junk. And you see all these wicks constantly everywhere? You don't trade that. You don't want that. You want clear action like this, or not like this, but like, see here how there's lots of large bodies and not much wicks. Obviously, it doesn't matter if it's going up or down. We want large bodies and we want the wicks to remain semi-small, apart from when stuff like when we're wicking into fair value gaps or wicking into that's showing reversal signs. But in general, we want large clear bodies. So yeah, I hope you enjoyed this video. I haven't really posted much Learn2Trade stuff, as I said, but I'll try and get more out as I become more free and as I have more time. So yeah.